Hi, I'm Rudy Welch, Principal Engineer with ClearPath Reserve Plans in Calgary. And I'll take a few minutes here to walk you through a typical Engineered Reserve Fund study report. This is, of course, just the cover page which outlines and describes what the project is, where it is, who the study was for, and when. Here is a typical table of contents outlining the key parts of the project, of the report, I should say. I'll zero in on component assessment and financial analysis. Here's a typical page from our financial, or our component assessment, I should say. Each common property element is described, and any special observations about that. These numbers tie to the master spreadsheet, which I'll come to in a moment, in our financial assessment. The financial assessment section of the report contains a number of tables and charts, and with master spreadsheets, some cash flow tables, a schedule. This section just describes what the key elements are of those tables and the factors used, like inflation, etc. This is a fairly standard master spreadsheet. Here's all of the components, common property components in this particular project. Here's the estimated replacement cost in 2007 dollars in this case when the study was done. Here's when those components were installed, or the year that they were built. The normal life of that component, any life adjustment that we may apply given the service environment or the condition that it's in at the time that we observed it. And then here's the resulting estimated year that we think it's coming due, and the number of years left from this particular time being 207 again in this case. Here's the first cash flow table that flows out of that master sheet. We have the fiscal years here, 25 years out as required by the Act. The starting balances in this particular year is 138,319. Some interest income at 3.5%. And there's a total annual contribution here that was projected, budgeted for this year in this project. And what this table does is just project that total contribution forward at an inflation rate of 3% to give total annual contributions that are slowly climbing up at 3% a year. Of course, what's of real interest here is the starting balances and what do they look like going forward into the future. And as you can see, by the time we get out to 2015 here, things start getting a little small, and we even start running into deficits here, just basically saying that the fund is not sufficient to meet these expenditures. Below that is a chart or a graph which just shows the contribution, the expenditures, and the starting balances. And as you can see, expenditures are migrating up of the balances, just indicating that the fund is really not sufficient. Our second cash flow table is a scenario for improving that situation, obviously. Again, the fiscal years, the starting balance is the same in that year. What we've done here, of course, is we've taken that 39,000, and as we go into the future, we add to it. And as you'll notice in this example, we've kept it level every fifth year, or for 5 years, and then change it every fifth year. And again, the starting balances naturally look a little bit better in terms of being able to meet these expenditures. That number in red, by the way, is the largest expenditure year in this 25-year cycle. So again, there's a chart or a graph below that that shows the starting balances, the contribution levels, and what you'll see here is, of course, the starting balance stays above the estimated expenditures, which is, of course, where you want to be. Another table, one of the last tables, is the schedule, as we call it. And what this does is basically project forward into the future all of the common property items, and it just shows them all on one table, the years that they're expected to come due, the 2007 dollars in this case, the estimated values for that replacement. Along the bottom you see a number of things, the total expenses in that year estimated with and without inflation, the starting balance, and these figures in terms of contribution are taken from that cash flow table, the suggested table, so that you get a picture completely on one chart for 25 years out when things are going to come due and what your fund could be looking like. The last table is a bar chart, which is simply that, just dollars of expenditure in the years ahead. And really all it does is it shows you kind of what's happening going ahead. There's a lot of expenditures happening here, which is not untypical for a building of this type that's about 35 years old. And things sort of start to flatten out a little bit as we get a little farther out. And that's it. And if you would like a full copy of this sample report, please send me your email and I'll send it out to you. And thanks for listening.